Hello, today is January 13th, 2018. The last call we had said that we were looking for a pattern with an early low and a late high. That's what we got. When the market reopens Tuesday, I'm expecting the same thing, a pattern with an early low and a late high. Tends to rally throughout the day, close near its high. And that doesn't preclude gapping down first. We said there was a 50-50 or greater chance of gapping down at Friday's open, but it was clear before the open that that wasn't going to happen. In general, the market's going up until it stops. There are a number of negative things here, but they will all be erased if we continue higher Tuesday. If instead we gap down very sharply, if that happens, then the party's over. Let's go over the reasons. This is a pattern, usually, especially on a Friday, which tends to rally into the close. If it doesn't do that, it tends to gap up when the market reopens. Rallies, all-day rallies on Friday should really hit new highs. Until the final minute of trading, we were under this high. The fact that we went over it and higher still after the close just tells me the amateurs were going long. Doesn't mean the market's going to stop, but it does have to be confirmed by continuing higher when the market reopens on Tuesday. Here were the MEJT signals. MEJT gives targets rather than entries and exits, so it's not unusual that you can have higher and lower targets from the same pattern. It did say that lower prices would print, which they did, but it also said we go over this line, which we did, and when all those things happened, it said they were false moves and wouldn't stick. It did give a buy signal at this low, and we did, even when we were rallying here, the market still said we were going to satisfy the ultimate sell signal, which we did here. But usually we get more than this. Usually and always aren't the same thing. But the fact that we couldn't clear this high, despite a very favorable pre-holiday pattern, gives us cause for concern that we might undercut this low. Of course, if we go up, it's an optional target. We don't have to do it. Well, this was a wave count I had back on November 28th. It gave reasonable targets of 27.79 and change. We've gone past that by about 8 points. If we reversed sharply and suddenly gapped down, which I'm not predicting, you could say that was close enough, but until that happens, the market still continues higher and goes past all these resistance areas. You can come closer on the price if you use the Gann methodology of dividing things into eighths and thirds. If you take the market's high, divide it by 8, and then take each of these eighths and divide it by thirds, you can see the nice hit right at today's high. If we stop here, it's pretty impressive, but if not, then it's a big nothing. George Lindsay has something called the low to high pattern. He takes lows, takes the time, and expands it, and that gives him a time of a high. These blue arrows give us a pretty close call, but it's actually off by a few days. However, if you look at some other things, you take where these red arrows lie. Let's try this again. If you take that low, you get a pretty good hit right at that low. If you use this blue arrow, you get a pretty good hit right over there. Slide down some more. It gets interesting when you get to the longer time frames. If you take that low you can see a pretty good hit right over here. But what's really interesting is when you come back to the origins of this 9-year bull market. Here's your low. Here's your 2B bottom. We're going back to 2009. You take that time. And you get a hit of the major low back in 1999. If we stop here, it's pretty impressive. If not, it's a big nothing. Well, no matter how many times Tom DeMark's stuff fails, I keep track of what it says. Here was your bar 13, and on Friday we completed a 9-13-9 sell signal. If this works, we should gap down sharply and undercut 26.7361, the origin of this 9 bars, within 3 bars. I think that's a pretty tall order, particularly when the market's been going up like that, and I'm not predicting it. Particularly when you've been going straight up and ignoring all kinds of things, or particularly when a rally on Friday should continue when the market reopens on Tuesday. If it doesn't continue, and particularly if we gap down sharply Tuesday, which is a big if we gap down sharply Tuesday, and if we undercut this within 3 bars, I think there's a good case to be made that this leg's over. It's a real tall order, and I think all systems will go on the upside unless we gap down sharply when the market reopens on Tuesday. I'm not predicting that it'll happen, but if it happens, it could be the real thing. And that's today's call.